For decades, one small device has quietly powered some of the fastest computer networks in the world. It's called the optical transceiver. And inside every modern AI factory, thousands of these tiny devices are working around the clock, moving enormous amounts of information between GPUs, servers, and Ethernet switches. And without them, today's AI infrastructure simply would not exist. Over the last several episodes, we've been building the AI factory one layer at a time. We started with the fiber optic cables, the highways that carry information as pulses of light. And then we explored the advanced lasers that carry the light. And then next came the optical transceivers, which convert electrical signals into light so they can travel across fiber before converting them back again at their destination. And most recently, we looked at the Ethernet switches, the traffic that controls the traffic controllers that decide where all that data needs to go. Together, those technologies form one of the most important systems inside every AI factory. But technology never stands still. As AI models become larger and as GPU clusters grow from thousands of accelerators to hundreds of thousands, and as every watt of power becomes more valuable, engineers have started asking a different question. Not how to build a faster optical transceiver, but whether the optical transceiver should continue looking the way it does. And that's a surprising idea because replacing a component that's already working well isn't something companies do lightly. It usually happens when the economics begin to change. In the early days of AI, adding another optical transceiver was not a big deal. Today, hyperscale AI factories may deploy tens of thousands of them inside a single campus. At that scale, every tiny improvement in power consumption, signal quality, or manufacturing efficiency can become meaningful. Which brings us to today's question. If the optical transceiver begins to evolve, which companies are building that future? And which companies could benefit the most if AI networking enters its next chapter? By the end of this video, we'll answer those questions and evaluate 3 companies using the 20-minute stock hunt AI factory score. So let's get started. So before we can understand what's replacing the optical transceiver, we first need to understand why engineers are rethinking the architecture in the first place. So imagine you're training one of the world's largest artificial intelligence models. Instead of one computer doing all the work, hundreds of thousands of GPUs are processing tiny pieces of the problem simultaneously. To make that possible, those GPUs have to exchange information continuously. And that communication happens at extraordinary speed. Every second, trillions of bits of data move throughout the AI factory. And the challenge isn't just computing the answers, it's moving the data fast enough to keep every GPU busy. If one group of GPUs has to wait for another, expensive computing power sits idle. And that's why networking has become one of the biggest competitive advantages in modern AI infrastructure. So here's how the process works today. A GPU generates an electrical signal, and then that signal travels into an Ethernet switch where it's routed towards its destination. And before the information can travel across fiber optic cable, it reaches an optical transceiver. Inside that transceiver, the electrical signal is converted into pulses of light. And those light signals travel through fiber at incredible speed until they reach another transceiver on the opposite end, where they're converted back into electrical signals and delivered to the next switch or server. It's an incredible design. It's reliable, and it has powered high-speed networking for years. But AI factories are exposing a new challenge. As networking speeds continue climbing from 400 gigabits per second to 800 gigabits, 1.6 terabits, and eventually beyond that to 3.2 terabit, the distance that high-speed electrical signals must travel inside networking equipment becomes increasingly important. Longer electrical paths require more power, and they generate more heat. And maintaining clean, reliable signals becomes more difficult as speeds continue to increase. The optical transceiver isn't failing. The architecture around it is reaching a point where engineers believe it can be improved. And that realization is driving one of the biggest design changes in AI networking. And in the next chapter, We're going to explore exactly what that new architecture looks like. So now that we understand the challenge, let's look at the industry's proposed solution. Imagine you're designing the next generation of AI networking hardware, and you have a problem. As networking speeds continue to increase, electrical signals become harder to move across a circuit board. The further those signals travel, the more power they consume, the more heat they generate, and the more difficult it becomes to maintain signal quality. So instead of asking, how do we build a better transceiver, engineers started asking a different question. What if we move the optics closer to the switch chip? And that's the idea behind co-packaged optics, often shortened to CPO. Today, an Ethernet switch sends an electrical signal across a circuit board to a removable optical transceiver plugged into the front panel. The transceiver converts that electrical signal into light before sending it through fiber optics. And with CPO, that conversion happens much closer to the switch silicon. The optics become part of the overall package rather than a separate plug-in module. Think of it like this. Imagine your desktop computer. Today's networking is similar to connecting an external hard drive with a USB cable. It works extremely well, it's flexible, and if something breaks, replacing it is simple. Co-packaged optics is more like installing that storage directly onto the motherboard. The connection becomes shorter, faster, and more efficient, but it also is more integrated. And that integration reduces electrical distance while improving overall efficiency inside extremely large AI clusters. Notice what isn't changing. The fiber optic cable still carries the light. Lasers still generate the light. Ethernet switches still decide where the data goes. The only thing changing is where the optical conversion happens. And that may sound like a small design change, but inside every AI factory containing hundreds of thousands of GPUs, small design changes can produce meaningful improvement at enormous scale. So at this point, you're asking, if co-packaged optics is better, why isn't everyone using it already? And the answer is surprisingly simple. Engineering is always a trade-off. Today's pluggable optical transceivers have one major advantage. They're incredibly practical. If one fails, a technician can replace it within minutes. If a faster generation becomes available, the module can simply be upgraded. And that's one of the reasons pluggable optics have dominated networking for decades. Co-packaged optics changes that equation. By integrating the optics directly along the switch chip, replacing individual components becomes far more complicated. Manufacturing becomes more difficult. Testing becomes more demanding. Servicing hardware can become more expensive. And that's why many industry experts don't believe co-packaged optics will replace pluggable optics everywhere. Instead, we're likely to see both technologies exist side by side. Traditional transceivers will continue serving enterprise networks, campus networking, telecommunications, and countless existing data centers around the world. Meanwhile, co-packaged optics may become increasingly attractive inside the largest AI factories, where maximum performance and power efficiency justify the additional complexity. This isn't an overnight replacement, it's a gradual evolution, and one architecture solving different problems than the other. And that's an important distinction for investors, because companies don't need co-packaged optics to replace every transceiver in the world for this technology to become meaningful. They only need adoption in the highest value AI infrastructure projects. Every major technology transition creates new opportunities. It also changes where value is created. Think back to the smartphone revolution. Some companies built the phones, others built the processors, and others supplied the displays, and others manufactured the cameras. No single company captured all the value. The same thing's happening inside the AI factory. If co-packaged optics becomes a larger part of the AI networking, investors shouldn't simply ask, who builds optical transceivers? They should ask, who controls the technologies that make co-packaged optics possible? Three different areas stand out. First, the company designing the Ethernet switch itself. Second, the company providing the custom silicon and optical connectivity that enables next generation networking. And finally, the company supplying the advanced lasers that make optical communication possible in the first place. Those three roles lead us to today's companies: Broadcom, Marvell, and Coherent. And each plays a completely different role inside the AI factory. And each benefits from AI in a different way. And each carries a different level of opportunity and risk. So let's begin with the company leading the transition, which is Broadcom. So when investors think about Broadcom, they often think about semiconductors. But inside the AI factory, Broadcom is much more than a chip company. It's one of the architects designing how future AI networks will function. Today's AI clusters already require thousands of Ethernet switches. Tomorrow's clusters require networking hardware that moves data faster while consuming less power and generating less heat. Broadcom believes one way to accomplish that is by bringing optics closer to the switch silicon. And that's why the company has invested heavily in co-packaged optics. Instead of viewing networking as individual components connected together, Broadcom's redesigning the entire package. And if that vision succeeds, every improvement scales across enormous AI clusters. Saving just a few watts on one switch might not sound significant. Multiply that across thousands of switches inside a hyperscale AI factory, and the impact becomes much more meaningful. Broadcom also benefits from something that's difficult to replicate, and that's relationships. The world's largest cloud providers, including companies investing tens of billions of dollars into AI infrastructure, already rely on Broadcom for critical networking technology. So that gives Broadcom an opportunity to introduce new architectures through customers already building the next generation of AI factories. Financially, the company continues executing at an extremely high level as AI semiconductor revenue grew more than 140% year over year, reaching approximately $10.8 billion during its latest quarter. Broadcom's also secured long-term design wins with companies like Apple, while continuing to expand relationships with hyperscalers, including Meta and Google. The combination of AI networking, custom silicon, and infrastructure software has made Broadcom one of the largest and most profitable companies in the semiconductor industry. Of course, no investment is without risk. Custom AI chips generally carry lower margins than many of Broadcom's traditional networking products. The company also trades at a premium valuation, meaning investors already expect years of continued AI growth. As you can see, the PE ratio is at 52. If AI spending slows, expectations could reset quickly. Still, if co-packaged optics becomes the defining architecture for future AI factories, it's difficult to imagine that conversation happening without Broadcom playing a central role. So, as of July 21st, the stock price is around $251. Market cap's at 1.18 trillion. The PE ratio is at 52, as we said before. Revenue is at 56 billion. Revenue growth year over year is at 44%. Gross margins are at 76%. The bull case: leadership in Ethernet switch silicon with unmatched performance. Co-packaged optic strategy can significantly reduce power, latency, and cost of scale. And they have deep relationships with hyperscalers, Google, Meta, OpenAI, etc. Strong balance sheet and free cash flow. The bear case: custom AI chips tend to have lower margins than traditional networking. The valuation already reflects a significant future AI growth. Dependence on hyperscaler spending cycles creates volatility and execution risk as industry transitions to new networking architectures. So now let's give the stock a 20-minute stock on AI factory score. The role in the AI factory is a 5 of 5. Broadcom sits at the center of the AI networking by designing the Ethernet switch silicon that powers the world's largest AI clusters. Competitive advantage, another 5 of 5. Its deep engineering expertise, massive customer relationships, and leadership in switching technology creates one of the strongest moats in AI infrastructure. The financial strength of the company, 5 of 5 stars. Exceptional free cash flow and a fortress balance sheet allow Broadcom to invest aggressively while returning capital to shareholders. The growth potential is 4 of 5 stars. AI networking and custom silicon should continue driving growth through Broadcom's enormous size naturally limits how quickly it can expand. The valuation is a 3 of 5, as the premium valuation and pressure on margins from custom AI chips leave less room for execution mistakes. Next is Marvell. If Broadcom's building the highway, Marvell's helping build many of the vehicles traveling on that highway. Rather than competing head to head in every part of networking, Marvell's focused on solving some of the industry's most difficult engineering problems: high-speed optical connectivity, custom silicon, advanced interconnect technology. These are exactly the areas becoming more important as AI networking evolves. One of Marvell's biggest advantages is its ability to design custom chips for hyperscale cloud providers. Companies like Amazon and Google increasingly want processors optimized for their own AI infrastructure instead of relying entirely on standard products. Marvell helps turn those custom designs into reality, and that strategy is already producing meaningful results. Its data center businesses generated approximately $2.42 billion during the most recent quarter, while analysts expect AI-related revenue to continue to expand as additional custom silicon programs enter production. The company is also positioned across several technologies that complement co-packaged optics, including optical digital signal processors and high-speed connectivity solutions. If AI networking becomes more specialized, Marvell could become an increasingly important partner for cloud providers designing unique architectures. And the opportunity is significant, but investors should also recognize the risks, as the market already expects substantial AI growth. After years of excitement surrounding custom silicon, Marvell trades at a valuation that assumes continued execution, as the PE ratio is at 75.4. Recent volatility demonstrates how quickly sentiment can change when expectations become elevated. Even so, if future AI factories become more customized rather than standardized, Marvell could become one of the biggest beneficiaries. So, as of today, the 21st of July, the stock price is at $72.89. Market cap's at $62 billion. The PE ratio is at 75. Revenues at $6 billion. The revenue growth is at 18%, with gross margins at 59%. The bull case: growing demand for custom silicon from the hyperscalers, AWS, Google, Microsoft, strong portfolio in optical DSPs, etc., expanding design wins in multi-year customer programs, operating leverage as AI revenue scales, and large addressable market across both cloud and enterprise. And then you have the bear case, which is high expectations are already baked into the stock after years of AI excitement, competitive pressure from larger players in custom silicon and interconnect, execution risk on design and wins production ramp, customer concentration with a few hyperscale clients, and then macros and AI spending cycles create volatility. All right, let's give it a 20-minute stock hunt AI factory score. The role in the AI factory is an essential enabler of custom silicon and optical connectivity that powers future AI networks, and it gets 4 of 5 stars. Competitive advantage: deep expertise in custom silicon and optical interconnects creates a strong position with cloud customers, and it gets 4 of 5 stars. The financial strength of the company: improving financials with growing AI revenue and solid balance sheet to invest for the future, and it gets 4 of 5 stars. The growth potential is 5 of 5 stars, and it's huge long-term opportunity as custom silicon and AI infrastructure continues to expand. The valuation, the risk, is 3 of 5 stars. Premium valuation leaves less margin for error if growth or execution slows. In total, it gets 4.2 out of 5 stars. So throughout this episode, we've talked about one component that may evolve, the optical transceiver. But there's another component that isn't going away, and that's light itself. No matter how networking architecture changes, fiber still carries the light, which means someone has to manufacture the advanced laser technologies that make optical communication possible. And that's where Coherent enters the story. Long before AI became today's dominant investment theme, Coherent was already a global leader in lasers, photonics, and advanced optical materials. Now, those same technologies are becoming essential to AI infrastructure. As demand for AI networking has accelerated, Coherent has expanded manufacturing capacity while investing heavily in its advanced indium phosphide platform. Those tiny semiconductor wafers produce the lasers, enabling enormous amounts of information to move to fiber optic cables. The company has also attracted significant industry attention following a strategic investment from NVIDIA and expanding demand from hyperscale AI infrastructure customers. For its data center and communications business continues growing rapidly as AI deployments increase around the world. Unlike Broadcom or Marvell, Coherent doesn't need to win the Ethernet switch. It doesn't need to design the custom processor. It simply needs to remain one of the companies producing the advanced optical technologies every AI factory still requires. That gives Coherent a very different investment profile. The company offers significant upside if AI optical demand continues accelerating, but it also carries the highest valuation of the three companies we've covered today. Investors are betting that today's rapid growth continues for years, and if that happens, Coherent could remain one of the most important suppliers in the AI factory, regardless of where the optics are packaged. So the stock price is at $132 around today, market cap's at around $9 billion, PE ratios at 77, the revenues at 5.2 billion, the gross at 27%, and the margins are at 33%. The bull case is leaders in laser and photonics with decades of R&D and IP, strong demand from AI data centers, cloud providers, and telecom, expanding MP manufacturing capacity to support long-term growth. Strategic investment from NVIDIA validates the technology leadership, and high-value products with attractive margins and pricing power. The bear case is highest valuation of the group leaves little room for execution missteps. Cyclicality in telecom and industrial markets could pressure the results. Heavy R&D and CapEx required to maintain technology leadership, and exposure to China and the global supply chain risks competition from other laser and photonic specialists. All right, the role in the AI factory is it gets 4 out of 5 stars, supplies the advanced lasers and materials essential for optical communication in every AI factory. The competitive advantage as it gets 4 out of 5 stars. Deep expertise in lasers and MP gives Coherent a technology that is difficult and slow to replicate. Financial strength is 4 out of 5 stars. Strong improving margins and solid balance sheet support continued investing and growth. The growth potential is 5 out of 5 stars. Massive long-term demand tailwind from its AI infrastructure and optical bandwidth growth. The valuation is 2 of 5 stars. It has a premium valuation reflecting high expectations and increased downside risk as it gets 4 out of 5 stars for total. So let's bring everything together. Throughout this episode, we followed one simple question. If the optical transceiver begins to evolve, which companies are positioned to benefit? And the answer isn't as simple as picking one winner. As each of today's companies occupies a different layer of the AI factory. Broadcom's building the network architecture. Marvell's enabling the custom silicon and optical connectivity behind that architecture. And Coherent supplies the lasers that make optical communication possible in the first place. Those are three very different businesses, which also means that they carry very different opportunities and very different risks. So let's compare them one at a time. First, you got Broadcom, which receives the highest overall score. The company already sits at the center of AI networking and generates enormous free cash flow and has deep relationships with the largest hyperscalers. If co-packaged optics becomes the preferred architecture for future AI factories, Broadcom appears exceptionally well positioned. The biggest concern is the valuation, and much of the optimism is already reflected in today's stock price. Next, you have Marvell. Marvell offers perhaps the most exciting growth story of the group. Its expertise in custom silicon, optical connectivity, and AI interconnect technology positions to benefit as cloud providers increasingly design their own AI hardware. That opportunity also comes with greater uncertainty. Future growth depends on successfully converting major design wins into long term production revenue. And then finally, you have Coherent. Coherent may be the wild card, but it's also a reminder that every technology transition still depends on fundamental building blocks. No matter how networking evolves, someone still has to manufacture the advanced lasers that create the light moving through the fiber. That gives Coherent a unique position. It doesn't have to win the Ethernet switch. It simply has to remain one of the industry's leading suppliers of advanced photonics. And when we step back, one pattern becomes clear. The closer a company sits at the center of AI networking, the more durable its long-term opportunity may become. But higher quality often comes with higher valuation. Meanwhile, companies further down the supply chain may offer greater upside, along with greater execution risk. And that's why there isn't a single correct answer. Different investors may reach different conclusions depending on their risk tolerance. One of the reasons I created the AI Factory series was to better understand how AI is actually being built. Not just the companies making the headlines, but the thousands of technologies working together behind the scenes. And over the past several episodes, we've explored fiber optics, lasers, transceivers, Ethernet switches, and today's episode showed something different. Innovation, it doesn't always mean replacing an entire technology. Sometimes it means rethinking how that technology fits into the larger system. And that's exactly what's happening with co-packaged optics. The fiber isn't disappearing, the lasers are not disappearing, and the Ethernet switch isn't disappearing. Even optical communication isn't disappearing. What's changing is how engineers are bringing those technologies together to build larger, faster, and more efficient AI factories. Will CPO completely replace today's pluggable transceivers? I don't think anyone can answer that certainty, but history tells us something important. As computing evolves, architecture evolves with it, and mainframes gave way to personal computers. On-premise servers gave way to cloud computing. Traditional data centers evolve into AI factories. And now the networking architecture inside those AI factories is beginning to evolve as well. And that's why I believe following the infrastructure is often more valuable than chasing headlines. The companies building the foundation of AI don't always receive the most attention, but they're often the ones enabling the next generation of innovation. And that's exactly what this channel is about, finding those opportunities before they become obvious. If you enjoyed today's episode, I'd like to invite you to join the AI Factory membership on buymeacoffee.com. Members receive exclusive AI Factory research notes, expanded company ratings, additional companies we have considered, and behind the scenes research that doesn't make it into the YouTube videos. Link is in the description below. Please like and subscribe, and it really helps support the channel and allows me to continue creating these deep dives into AI infrastructure. Thanks for watching, and we'll see you in the next one.